Okay. Hello, everyone. Good evening, and thank you for joining us. This is session 10 out of 27 sessions that we are still going to have in this conference, in this virtual conference. I'm excited to be here once again, and I'm very sure that you are all excited to be here too. If you are online, please let us know. Drop your comments. Give us Let us hear from you. How about the feedback, the audio, the video? So today I'm excited to have one of my role model, my someone I can even call my mentor. Please, before you bring up the slides, let them see your face, sir. Let them see your face in the.
Okay, let me share. Let me stop sharing first of all
Yes,
before
sir. Yes,
I
sir.
do that.
Yeah.
Okay.
This is Mr. Akintayo Olutade, and it's actually one of the people that I would say he raised us in our church. He's our father. He's our father. So he's our mentor. He's a mentor to many of us, and he's a father to many of us. He's our spiritual father. And I must tell you, he's a financial expert, a currency trader to the core. He has trained CBN, that is Central Bank of Nigerian staffs, before he moved to the UK. But before we commence the session, okay, what I'm going to do is this. I want us to engage in conversation, sir. Good evening, sir.
Good evening.
Eh,
Good evening, Sheung. How are you?
I'm doing good. Actually, if you don't
Can you
know,
hear me
yes, I can.
properly?
I can hear you. Actually, if you don't know
It's
that, yeah, I'm Oluwaseun.
yeah.
Oluwaseun is my second name. I know some of you
Oh
know
well,
me as
I know
Mayowa.
Mayowa. I know Mayowa. I know Sheung. So
Yes, sir.
Mayowa, which one do you want me to?
Okay, yeah,
Okay. Good
official name
afternoon,
is
Mayowa.
Mayowa. So thank you for
Yeah,
joining our conference, sir.
it's a pleasure to be here. It's a pleasure to partake in this program. It's a pleasure to offer the little that we could also do to each and every person. So it's a wonderful experience to be here, and
Oh,
I'm looking forward to it.
okay, thank you so much. And one of the reasons why I'm excited about all these things is that I could remember the time I was following you and your friend, Chaplain Taiwo Balogun, who happened to be here
Yeah.
yesterday, and he took us on a
Or
class
day
on
before yesterday.
a day before yesterday on Tuesday, and he
Yeah.
took us a
Yeah.
class on forex trading masterclass. So I would say one of the things I learned from two of you is empowerment. Let
Yeah.
people helping people to achieve their dream. And during the time we were together, I also realized that when you help people to achieve their dream, you are not actually helping them, you are helping yourself. And that
You are
is
helping yourself.
yes, and that is one of the reasons we have this virtual empowerment conference up, and we are looking at
Yeah.
using the conference to empower 5,000 people globally, and we brought around
5,000 people.
yes globally, and we
Okay.
brought around 27 topics, business topics that anyone can just go into and started venturing into it. And we believe that with the time, if that person didn't quit or relent, he or she will get the results. So thank you so much,
Okay.
sir, because I know you and your friend are the engine room behind me. I won't lie to that. And when we reach out to you, accept our invitation. I understand that the busy schedule and what is going on at the moment. But thank you so much, sir, for honoring our invitation.
It's a pleasure. If there's anything that one can do,
Okay.
one must always remember that some people are invested in you. So the best thing for you is also to invest in as many as possible. The Bible says, cast your bread into the waters. After many days, it will come back to
To
you.
you. Yeah.
So it's important for us to, one, out of what we have learned, we should also learn to give back to the society. The best person who gives is not the person who gives you naira or who gives you dollar or pound sterling or Japanese yen or any other currency. I think the best giving that anybody could give is in developing other people, so that that person learns to be able to fish himself. That's just it. I can give you money and you finish spending it right in my presence. At the same time, I can give you an idea and you run with it for a lifetime.
No, I agree with
And
that.
that's the difference between the two.
Okay, sir.
Thank you.
Okay, you are welcome, sir. You are welcome, sir.
Thank you.
Right now, where are you joining us from?
I am in London right now. I am in London right now. And in a place called Lewisham in London.
Okay.
So I think that's the best I could say right now.
Okay. Before we commence your session, sir, I know this journey that this equity training is not something that you brought from the heaven. You come across it somehow. Let us know, how did you come across it, and why do you also take your time to develop yourself around the business?
Okay. You are talking about equity trading or
equity trading in general, or why, or maybe let's put it this way: that why did you decide to go and join entrepreneurship?
Okay, let me put it this way. Okay, so you want should I wait? Okay, all right. I will just say this. I think without blowing my trumpet, I have been buying and selling shares as early as 1991. 1991, I have been into stock trading. 1991, I think I started 1991. Even before getting into university, I started trading stock 1991. And I came across that as a result of probably because my family investment is majorly based on stock. My father was, I had a father who was, okay. I said that my journey in stock trading started about 1991. After finishing secondary school, I didn't finish in 1990. After finishing secondary school, I was picked up by the family to oversee all the family investments, which is in stocks. And funnily, my father was invested in stocks to close to about 90 Nigerian companies then.
Okay.
So I picked up that interest there. I was the one tracking some of those things that have been done. So that was where I picked it up, and eventually evolved over time into other things. I had other support. I had an uncle who is in finance, who was into banking, okay, central banking, and who almost every day or every week then brings Business Week.
Okay.
So from Business Week, I learned to read financial statements. I read to understand the economy, and know how to appreciate and how to make decisions based on make financial decisions. So I think from there, that was how I transcend, and then went into the uni. After finishing, I had a stint. I worked in the bank for about 10 years, and I worked in Treasury. So I worked in Treasury, I worked in financial control, I worked in HR. So one way or the other, I had a very robust knowledge of the business place. And from there, after about 10 years, I felt, well, what's left? I had a plan, I had a goal of 5 years. And when it was about 5 years, I was telling God that, can I do another 5 years and make 10 years? So by the time it was 10, I was out. And from there, I started doing my own things. So that's the more reason why, that's how I will say the journey has been.
Okay, sir. That is awesome. You have your story. I think your story is now your process. So what we are going to do, because after this session, we are still going to have another session too coming up at 8 p.m. That is on how to set up online radio station. So what I'm going to do, I'm behind the scene here, sir, while you continue with the session, sir. I'm behind the scene.
All right, no problem.
Yes, sir. Thank you, sir.
No problem. So, okay, good evening, ladies and gentlemen. It's a pleasure for me to be here with you. And I appreciate God for the opportunity that God has availed me and you to meet on this platform. For those of us who are live together, and for those who will see this later on, I want us to think about this, that one of the opportunities that is available unto you and unto me, so for us to at least make ends meet, so, or to But as we progress, I will bring out some things and I'll make us understand that, one, if you are a starter, I would advise. If you are a starter, I would advise that, one, as good as equity trading is, okay, I would advise that you get a job.
Okay.
You might be surprised that that's first thing I'm saying. I would advise that you keep a job and do this as an alternative stream of income. As you do that, one, it does not put pressure upon your capital. One, because you will not be forced to dip hands into what you have for trading. You will be able to do things. It gives you a process by which you are able to isolate your trading aside. Okay, so if you want to trade FX, you want to trade CFD, you want to trade options, you want to trade equity as a particular one. If you are a starter, I would advise that you have a job which will meet your daily needs, and then from there you can focus on this one. This probably does not take you so much time. It does not take you so much time. It gives you free time. At your free time, you can, if you set up the process, you can always do it by yourself. And so, but before I drift too much into that, we'll still go back into that. I want us just to look at what equity trading is. There are some definitions we'll bring into it, and we'll see those things that are relevant to you and to me. So, and then we'll look at opportunities. My focus would be more on, I know that the catchment of this might probably be Nigerians. So I will try to localize it to Nigeria to some extent, but where necessary, I would talk about the international markets, because that is where the opportunity is. Though if you are in Nigeria, I know that one way or the other, we find ourselves in situations where there is a little bit of restriction at this particular moment, but I will still, that regardless of that, there are opportunities. If you are like me, I cut my tooth from Nigeria, and from there, I've been able to play on the global stocks. So it's possible for you also like that. And if you feel that, okay, you are able to go straight, it's wonderful. Whichever one, you can play the game. It's always similar. What you need to do is always similar. And as you do them, you discover that, yes, you have a nice time enjoying trading equities. So if we're going to start about trading equities, the first thing we need to understand is what is called the financial market. Okay? We need to ask ourselves, what is the financial market? And the easiest way for me to say, to talk about the financial market, is just the platform where buyers and sellers engage in the sales and purchase of financial products. Okay, the financial market is where the buyers and sellers, where they meet, okay, to they engage themselves in the sale and the purchase of financial products. So those products can be securities, it can be commodities, it can be currency, it can be stocks, it can be bond, and it can be stock, it can be bond, and their derivatives. It could be stock, it could be bond, it could be the derivatives of this one. Okay, whereas commodities, such as commodities could be gold, it could be agri products, it could be copper, it could be platinum, any one of those things. Okay, so they sell securities and commodities. That's the financial market. The financial market also is inclusive of where you sell currencies, also where you sell insurance, also. So those, so it's a broad market. Financial market is a broad market. It's divided into about 6 or 7. Okay, there's the capital market, the insurance. As we progress, we'll look at it and we'll look at it. So we need to first of all ask ourselves, what is the role of the financial market? Number one thing that the financial market does is to set acceptable price. that will be used for trading securities and commodities and then currencies, okay, across the globe. So gold, okay, an ounce of gold if you're in Lagos, it's the same that you will buy it, almost similar to what you will buy it if you're in London, especially if you are using the same exchange. So it's to set an acceptable price. Okay, oil is also part. There's oil market, but it's not part of the financial market. But it's part of the commodity market. So since oil is a commodity, it is also. Don't let me say it's not a part of financial market. It's part of the financial market because oil is commodity on it. So copper, corn, everything like that. They are all traded in the financial market. Now, the second duty of the financial market is to assist businesses in raising funds. So if you're a business or you want to raise short-term fund, you want to raise a long-term, you want to raise short-term fund, you go and raise money in the money market. If you want to raise long-term fund, you go and raise money in the capital market. So that's another function of the financial market. The third one is for provision of platform for trade and exchange. So they provide platform for trade and exchange. You have corn, okay? And I need corn, so I can exchange my cash for corn, okay? You have copper, or you have platinum, and I need it. So the financial market provides a platform of exchange, whether it's for securities, whether it's for commodities, whichever one. Or if I'm trading options, or if I'm trading futures, the financial market provides a trade and exchange platform for anybody who wants to buy or to sell, okay, or people who wants to change within themselves, okay. There are terms like straddle and co that people do. You can change. I can buy and sell at the same time. So financial market provide such a platform.
Okay, sir.
Okay. Now, as I briefly said, securities and commodities. Securities and commodities. Just to highlight this, what are securities? What are commodities? Things that entail security are stock, bonds. Those ones, stock and bond. Stock can be broken down into different types of stock. Later on, we'll look at the types of stocks that we have. Bonds, we can look at that. Their bonds are also now. There are other things like in money market, when you talk about things like bankers' acceptances, commercial papers, and things like that. So they are all securities, but those ones are traded in money markets. These securities that we are talking about are traded in the capital market, okay? The stocks, the bonds, okay? There are other things like CDOs, they call collateralized debt objects. There are mortgages, also there are securities, they can be traded. Now, commodities are basically precious metals, as we have said, precious metals, okay? They are, which include platinum, okay, and several other metals like that, okay? Each and every one of them have a function they do. And these things that we call commodities eventually are responsible. They function most, they are determinants of things that is used in determining inflation rates. Okay, it is what happens in commodity markets that transfers to securities markets. Okay, so if prices begin to increase in commodity markets, companies begin to absorb that price until it gets to a point when they pass it to buyers. Okay, and as they pass it to buyers, okay, their revenue increases. When their revenue increases, that means the price of their stock will increase. When the price of their stock increases, okay, everybody sees and says, oh, Apple has gone to so amount. Microsoft is trading at almost close to 200. That's Alphabet. Amazon is trading at over 1,000. So it's just like that. It's so one market goes to another one. So you must understand how one market affects the other. Okay, so securities and commodities, they are intertwined together. Okay, they are intertwined. If oil prices increases, businesses that run their companies that run their businesses on oil, okay, is going to affect them in the short run. If it affects them in short run, it increases their cost. Okay, they pass the cost back to the end users. And if the end users decide to cut back, okay, that means it will affect them negatively. But if end user absorb the cost, then it will increase revenue to them. So what their sales, that is something that they have been selling at, let's say 100 naira, or let's say $100, could go as high as 110. And by the time analysts do analysis of their revenue at the end of the quarter or end of the month or so, it's more like, oh, they compare how much did they make last month, how much was their revenue last month, or say the revenue was 100 million. Okay, how much is it this month? It's 110 or 120 million. So everybody thinks, okay, that company is moving for higher, and then it translates in the amount they are going to, their shares will go for. The only problem is when their profit margin begins to thin down, when their profit margin begin to reduce, then analysts and investors can then reduce the cost of such stock. Do you understand what I'm talking about? Let's keep moving. As we keep moving, we'll get to see. So we look at this moment, what we can say the components of financial market. The components of financial market, as I've said, are this. The capital market is the first one. The second one is the commodity market. And then the money market. The capital market is, you have the primary market and the secondary market. Primary market is where it's where they sell shares, IPOs and things of that sort. And then secondary, there's primary market and secondary market. Just take it that way. We'll get to exchange and we'll look at that. Now the second, then there's the commodity market. We have spoken about that, where precious metal and agricultural products, whether it is beef, it is corn, it is millet, it is cotton, it is diverse things. That's where they are sold. That they call money market also. That is where companies buy money. That's where they buy. Okay, you see companies, they need short-term loan. Okay, so they can raise commercial paper, or they can raise bankers' acceptance. They can this is where banks lend money to banks. So financial institutions, that's where they trade money within themselves. That's it. Now capital market, under capital market also you have bond markets. Okay, so bond market is part of the capital market. It's where companies issue bond, and bonds are long-term loans. There are some corporate bonds that are 30 years. Some of them are 10 years. It depends on the economy where such a company that is raising such money operates, and it depends on the type of market it is. So there are corporate bonds that are more than 10 years. There are even bonds that are 100 years. Municipal bonds, those ones are 100 years. Some of them are long to that extent. And then there's what we call derivative markets. This is probably one of the most interesting markets. Derivative markets is where derivatives are sold. Now, derivatives are synthetic. I'll just call from the word derivative. These are shares. They have on derivatives are securities that they are not directly security on themselves. Okay, they are underlying security. They have an underlying asset that is propping them up. It could be shares of a company. Most of the time, it is always shares of the company. It could be mortgage. Okay, it could be mortgage. It could be insurance. They are derivative. It means that security is derived from another asset. Okay, so supposing now, all right, it's not common in Nigeria right now. You don't so much see people take up mortgage. But let's say that a company has 100, a bank has mortgage that is worth about 100 billion, okay? And it's waiting 100 billion naira, and it's waiting. It cannot just wait on that. There are investors who are willing to give that bank money today, all right? So that they will be, they will eventually now be receiving money back from those who have that, from those people who mortgage has been issued to. Okay, for example, all right, 5 of us decides to take mortgage of 100 million. Now, the bank has a right, or the bank can create another product, okay, out of those mortgages that they have given to 5 people, and sell that mortgage to another person at a discount, but they will collect the money today so that they will be able to keep trading. So that's the process of creation of money. Okay, they keep creating money over and over again. So they'll give you money, they will sell, they give you money to go and buy a house, okay, and you will be paying over the next 10 years or 50 or 20 or 30 as agreed. Okay, now your repayments, okay, your repayments, rather than for them to wait over 10 years, what they will do is that they will sell the asset, because that repayment that you are going, that mortgage has become an asset. They will not sell it to another person. Okay, so those are the things we call derivative. It's like that. Derivative market operates based on that. And then there is the insurance market and the foreign exchange market. I am sure that my friend and my brother has handled forex to some extent, trading in forex market. So I won't go so much in the insurance market. There are businesses that insure, okay, and when there are businesses that insure other businesses, by the time those insurance, they pool together those insurance and sell it to investors, okay, who will eventually be collecting money, okay. So that's how money moves around from one person to another, from one institution to another. This how money moves around, okay. Foreign exchange market, we've said, briefly, I'll just say that I will not go so much into that. It's where currencies are traded. That's it. You want to trade the cable, which is the Great Britain pounds against USD, or you are talking about Euro USD, or you want to trade 2 pairs of, you usually trade 2 pairs of, a pair of currencies, okay? One currency against another. You want to trade USD against Nigerian naira. The only thing is that in Nigeria right now, because of convertibility, there are some currencies that are fully convertible. There are others that are not fully convertible. Nigerian naira is not taken to be fully convertible, okay? Because government still determine the exchange rate to some extent, okay? But when a country decides to say, look, we are going to allow our currency to float, okay, to be controlled by the demands, the power of demand and supply, okay, then such a currency is said to be fully deregulated. So it is fully convertible. That's it. But in Nigeria's case, CBN determines what the exchange rate is. There are pros and cons of that, but that's not our purview for here. So let's just move forward and keep with what we are talking about. So I've listed, this just talks about the components of financial market. Now, the key segments of the financial markets that we need to understand, there is always the buy side. So that means if you are buying, then there will always be the sell side. There are two sides to it, two major sides, the buy side and the sell side, okay? And then there is the market infrastructures, which is the platform, okay, which you are selling on, okay? That's, there are occasionally the buy side is the retail people who come in to buy, or it might not be, it might be corporate, it might be corporate entities, it might be, if you are buying, you are taking to be on the buy side. And then those who are selling, it can be the mortgage brokers, it can be the brokers, it can be the deal brokers and things like that. So all those ones are taken to be the sell side, and then the market infrastructures. And the final, the fourth player in that market is the regulator. There is always a police, okay? So that if anybody misbehaves, somebody to correct. If it's in the capital market, it is SEC, okay, Security and Exchange Commission. If it's in the banking sector, money market, most of the time it is, in Nigeria, it is CBN. In UK, it is Bank of England. In America, it is Federal Reserve Bank. So there is always a regulator who regulates everything and make sure that everybody is paying fairly. I don't know how many of us have heard about the London LIBOR case some years ago, where some banks were rigging. They were rigging the prices of money in London LIBOR. London LIBOR means London Interbank Offer Rates. Okay, it's a determinant of interest rates that money will be bought and sold. Okay, so it's an aggregation of the rates by quotations of rates by different banks, several banks, maybe several big, huge banks, massive banks. Okay, so every one of them quotes, and then the average of it is taken. So, and later on they discovered that some bankers were rigging it so that in their favor, and they were just quoting wrong things. So it took the regulator to punish. Some people went to jail for this in the UK. All right. So now, financial market activities. What are the activities that happens within the financial market? Okay, there are various activities that happen for the smooth running of the market. Okay, and it includes primary trade, primary and new issues, which is fresh issue. Okay, you want to issue new shares. It's a primary issue. Okay, and then there is a trading activity, there is a clearing activity. Okay, and then there's a settlement activity, there is investment research and investment management, and then there is security lending. Let me just explain primary issues now. You're supposing now company ABC Nigeria Limited has 100 million shares, but it needs money and decided to go to the capital market to raise another 50 million. So he issues additional 50 million shares. Okay, that 50 million shares is taken to be primary issues. Okay, it's a fresh one. Okay, and then the secondary issues are the ones that are already in place. Now it can be trading. So that means it's a trading act. Then when you are trading on the exchange, there is a clearing house. Just like in banks, there's a clearing house. Okay, you want to sell, you want to sell, somebody else wants to buy. The two of you are not using the same broker. So you present yours to your broker, and your broker takes it to the clearing house and then presents it to, and it's sold to, okay, the exchange is a clearing house itself. Okay, so, and it's taken to, is now transferred to a buyer side who will provide money. So the process of presenting shares and collecting money can also is taken to be clearing versus settlement also. Okay, so if you most of the most of the exchange right now operate T plus 2 days. That means if I transact today, 2 days time, okay, I will get settlement in cash, or okay, in fact, I will get settlement in cash. So that's just it. So if I sell today, I will be paid in 2 days time. Okay. So transaction day plus 2. There are some that are, before it was transaction day plus 7 in Nigeria, quite a long time ago. And even in New York Stock Exchange and London, it's always like that before. But over time, they've been smoothing it. The only thing is this, the major thing is this, even if you say you are buying on through online broker, yes, it might be said that this transaction has been executed. It will not be delivered until some period. Okay. Now, another thing that happens in financial market activity is investment research. That means there are some people who do research on a company and they make it available. Some of them publish it, some of them sell those research. And there's something they call also investment management, which is a case where you have money and you give it to somebody to manage that money, and such a person will buy and sell shares on your behalf. Okay, there's a power of attorney that you give to that person so that he will buy and sell shares. And then the final thing that happens in the financial market is security lending. Okay, that means I have a security, I have shares, I have those of you in Nigeria who read the story of about Tudeko and First Bank. Okay, he pledged his shares in Honeywell to borrow money. Okay, so that is security lending. Okay, you use your security, place it down. Okay, lend me this money. I use my security as a collateral. That's the essence of that. Now, key financial market functions. Okay, there is the front office, which are the people that faces the customer. They are the ones that interface with the customers. And there's the back office, which are the people when the customer service and co have done their own, they pass it to them. They are the ones who execute all the instructions. And then there is the risk management function, which is where risk is controlled. It is important. One of the reasons why companies don't, brokerage firms and security companies don't collapse and retail investors lose their money is because of this risk management function. They have a risk management function, but individuals will tend to just play along, will follow hunch and things of that sort. And it's something that a new trader must always be aware of. Okay, you should be very cautious about this. It's important for you to understand how you manage your risk. Okay, one of the best way is that none of your portfolio, if you have no trade that you do must be more than 2%. Normally it's said that it should not be more than 2% of your portfolio size. No singular trade should not be more than that. Okay, let's say, or because of the size of your portfolio, it should not take more than 5%. It should not take more than 5%. So that even if that deal went wrong, okay, you will not lose beyond 5% of your money. That's just it. All right. All right. Now, types of securities. Okay, we said that there are debt securities, equity securities that we are talking about, derivatives, and then hybrid. Okay, hybrid is one. We know that debt securities. I will just show us some example of debt securities. Okay, equity securities, derivatives, and then hybrid. Hybrid, I will just treat hybrid right now. Hybrid is an interplay of either debt and equity, or debt and derivative, or equity and derivative. Okay, you can create a product around a security around that part. Okay, when I was talking about collateralized debt obligation, okay, CDOs, so CDOs, CLOs, all of them, they fall about hybrid. I will just categorize them. But for a starter, you don't need to, but you must know that this exists. As you grow in knowledge, you then get to know. Now, debt instruments, there are debts that are short-term or medium-term, and then they're long-term, okay? Most of the short-term debt instruments fall into short and medium-term, they are money market instruments. That means anything short-term is 1 year, okay? 1 year and below, 1 year, probably 1 year, 2 years, okay? Medium-term, 5 years, nothing more than 5 years. Then the long-term is 10 years and above, okay? Now for short-term, short and medium-term, there could be notes, okay? Notes are about 2 to 3 years maturity. So you repay back in 2 to 3. Treasury bills, okay? Treasury bills are 90 days, usually 90, 180 days, all right? Now, certificate of deposits also. Now, commercial paper, which is banker's acceptance, commercial paper, and then repurchase agreements, which is usually called repo, okay? Now, long-term is bond and debentures. Bond and debentures. So you can issue a bond for 10 years, issue a bond for 12 years, 15 years, 20 years, corporate bonds, different types of bonds. There's government bonds, there's corporate bonds, but they are all debt instruments, okay? Now, classification of derivatives. Derivatives, remember I said that derivatives are not an asset on their own. Don't let me say they are not an asset on their own. They have underlying assets, which is controlling their actions, which is probably their value is based on another asset, okay? All right, so it could be a stock derivative. So when you talk about stock derivative, then you talk about options, okay? Options can be a call options, a put option, okay? There are two basic call options. Now, strategies of now putting them together is diverse. It's at least 16 or 20 of them, so strategy of putting them together. Now, it could be futures market, okay? Futures market is a different market on its own, and it could be a forward contract, okay? I can buy something today and tell you, I can say, I can go into agreement with you today and say, futures and forwards are almost the same, but they are different, okay? I can buy something today and I ask you to deliver in 90 days, okay? All right? So we make an agreement today, it's deliverable in 90 days, okay? So money will exchange in that 90 days, okay? That's it, okay? That's a forward contract, okay? Okay, futures, I can invest in, I can pay money today, right? And I can say that if, let's say that gold is trading at 1750 today, and I can say I can buy a gold future, that gold will trade at 18, or I can say it will trade at 1800 in 90 days time. That's a futures market. That's more like it. Now, there's something they call swaps, which is interest rate swap and currency swap. I don't want us, this can be a little bit confusing for somebody, but just know that there is swaps. So there are derivatives also. Interest rate swaps can be a currency swap. It could also be interest rate swap. Now, equity instruments. Remember that we said that there is equity, there is debt, there is debt market, equity market, there is insurance market, there is mortgage market. I didn't even talk about that. Mortgage market. There is derivative market. Now, in equity, what are those things that are bought and sold? Usually, they are shares. In time past, it was majorly share certificates. You must provide share certificates. But now, life has gone advanced right now. I remember then when I started trading, or investing, okay, you give money to a broker, you say, I want the shares of PZ, I want Unilever, then it was Lever Brothers. Lever Brothers, I want UAC. Now you will buy that, they will buy it for you. They will tell you after 1 week that, oh, we have bought it. Okay. They will give you contract note and things like that. So you might not even get your share certificate until about 3 months' time. So even if you want to sell it, you are locked in a little bit. But today, if I buy today, so far there is a contract note, I can sell it tomorrow. Okay, that is, and life has even moved advanced to the extent that, look, I can buy today and sell today, because that's the essence of those who do day trading in stock. Also, it's possible for you to do day trading in stock. Okay, I can buy today and sell today, because I don't need the certificates, because there are records, they are tracked. They've moved from paper to a depository, okay, or a clearing system. In Nigeria, you have something they call CSCS. So CSCS, who does the clearing, okay? It goes straight into your CSCS account. You can trade from that account straight away. So I can buy in the morning and sell in the evening. So far it is, I can buy in the morning and sell in the afternoon, okay? And that's it. And where there is possibility to do what is called short selling. I can sell before I buy. If I know that this company is going to have problem, okay, I can sell today. I can sell this morning in the morning and buy later in the evening. Well, if I know that the results is not going to, if I feel that the result is not going to be favorable, okay, I can buy. I can. So just like you can short a currency, you can always also short in some environments. I know that is not possible in Nigeria right now. So you cannot short shares but in some companies, in some countries, in some economy, you can do that. One notable example in recent times is GameStop. GameStop is one notable when hedge funds, okay, hedge funds are businesses, they are corporate investors, they invest, they're private investors, okay. All of them were thinking that, oh, this company will not survive. So they were shorting it until a group of people using Twitter and co, Reddit, a group on Reddit, they came together and said, look, why are these hedge funds? They just want to bring this company down, things like that. And so they were buying up, and they were pushing the price up. And those who are shorted eventually lost a lot of money. A lot of hedge funds, they lost money on that. They lost money. But one thing I'm sure is this: by the time, at the end of the game, it is always the retail player who does not know that is going to lose a lot of money. It's dangerous if you are a starter, don't ever join them. You could wipe out all your capital trying to do that, okay? Don't trade against a trend. Never, ever trade against a trend. That's yourself, okay? So equity instruments majorly is shares, okay? It's shares, or what the American call stock, okay? It's a stock. The British call it shares, the Americans call it stock. So it's they are equity instruments. They're majorly equity instruments. Now they come in different ways. One of them is called common stock. Okay, if you have done economics or commerce in secondary school, you remember there is the common stock. Okay, ordinary shares. Common stock is the ordinary shares, and then there is the preferred stock, which is the preference shares. Okay, now in some cases they're paid up capital, additional paid up capital. Okay. Now there's treasury stock, which is when an organization decides to buy back its own stock. Okay, you have already sold it, but you think that, look, all right, management always make that decision, look at themselves and say, look, wow, we have too much shares outside, and we don't want it to fall into wrong hands. Okay, we have a lot of cash. Why don't we buy back some of those? If you cannot make good use if there are no opportunities for you to, you are generating cash, so much cash, and there's nothing for you to invest it in, okay? You don't need to enlarge your factory or this one new that will bring that could help your business in the future. The best thing for you is to buy back those stock. So those are the things they call treasury stock. Now there's something they call retained earnings, which is, for example, a company makes, say a company makes 100 million this year, then what happens to retained earnings is this, and it's going to pay, the total dividend is going to pay out of that is just 60 million. The retained earning is 40 million. That's just it. Okay. So it's part of equity. It's part of equity. So, and then other accumulated income, comprehensive incomes and reserves. So those are examples of things that you call your equity. Now, I've explained, okay, these are, I think I've gone through them one by one. So retained earnings, accumulated, okay, whether it's accumulated loss or income. Okay, all right, so I've explained that. So now one major thing that we need to know, one major thing that we need to know, that for every business, there you have assets and liabilities. Assets are money due to you, the ones in your hand and the ones due to you. Okay, your stock, okay, your liquid assets, it entails your liquid asset and the fixed asset. Okay, your buildings is your fixed asset, your land, your vehicles, they are fixed asset, and then stock. I'm not talking about shares. I'm talking about stock. That, okay, what you are going to trade on. Okay, so those things, when you put them together, they are. So when you combine all your assets, okay, a business is always valued at, you go into their balance sheet, you see what is the total asset that this business has. Okay, let's say it has 200 billion of asset. Okay, how much debt and how much debt does they have and all those. So you put their liabilities. Their liabilities have to do with the amount of what you owe. Okay, okay, the one that is due in the near term and in the long term. When you, the value of a company when you did the liability from the assets. Okay, so you have equity. The difference between the two is the equity, and it is that equity you are trading. You are trading. So really, some business find themselves in situation where their total liability goes becomes greater than their total assets. Okay, in such a situation, the shareholders are advised, okay, to recapitalize such business. That means bring more money so that your assets will grow up. Okay, and so that's recapitalization. So for a business that finds itself having negative equity, then they need to recapitalize. Okay, most of the time it is current shareholders that does that, because I don't see any reason why I should, as a fresh investor, come and that means it's one of the first signs is for me to see that, the people I'm committing my money into their hands, I'm not so sure they will be able to manage it well. Why did they have a negative equity? All right, unless there is a contingent, an unforeseen circumstances that caused that to happen. Okay, so it's always like that. So it's always like that. Equity is supposed to be positive, but there are very few occasions, very, very few occasions. And when it happens, shareholders of those companies or the management of those companies is always advised to recapitalize. The board and the management recapitalize this company as soon as possible. Recapitalize it so that it can continue. You know, businesses are supposed to be a going concern. So that's that. Now, you will see that we have been talking about all other things, but we need to know everything around what we are doing before we begin to trade about it. Now, I want to talk about the exchange right now. So what is the exchange? There is an act of 1934 in the US, which is called the Securities and Exchange Act 1934. And it calls an exchange any organization, association, or a group of persons, whether they are incorporated or unincorporated, which constitutes and maintains or provide a marketplace. The most important word is it provides a marketplace or facility, okay, for bringing together purchasers and sellers, okay? It brings together buyers and sellers, okay? Okay, and they perform that with respect to securities. So that's an exchange. That's basically, so an exchange is a physical or a virtual meeting, okay? Majority of the exchanges right now, if you're talking about cryptocurrency, you can't see a physical place where cryptocurrency is sold also. It's a virtual meeting place, okay? Coinbase, Binance, CoinGate, every one of them, they are all exchanges, but they are virtual ones. They are physical ones where you go to Nigerian stock exchange on Custom Street, okay? You go to London Stock Exchange, also here. And exchanges could also include floor-based markets as well, okay? Where you use electronic communication networks, ECNs, also, okay? So you are trading on Forex and they tell you what type of account do you want. Is it the ECN account or something else? So is that electronic communication? So that you can trade directly with the market, okay? Unlike in some cases, there are some markets, there are some accounts that, okay, you go through a broker, okay? For ECNs, you go directly and you sell and you buy and sell directly on the exchange. Now, functions of the exchange, exchanges are intended to provide orderly, liquid, and continuous markets. They're supposed to provide orderly, liquid, and continuous. That is why in some of those markets, there are some securities, they will appoint market dealers, okay? When everybody is selling, under obligation, market dealer is supposed to continue buying, okay? Okay, 1 million people want to sell their shares. They don't like these shares, they come anymore. A market dealer will buy it from them, okay? And it's the market dealer, so it has a preferential status, okay? All right, he buys at a discount from them, okay? And then when things turn around, a market dealer or market maker, they call market maker. A market maker begins to sell back, okay? So it's like a temporary. They are the ones that facilitate that liquidity. That's it. Now, a continuous market. Another function is for them to provide a continuous market for transactions that will be executed at any time for a price, okay? So that the price in the morning can be different from the one in the afternoon. That's just basically, so that's when you see the chart, you see that the price of a particular security in the morning or 1 minute ago is different from now. That's just more like it. So that's what an exchange does. And examples of exchange, I'm going to give us 10 ones. There's a New York Exchange, there's the NASDAQ, there is the Tokyo Stock Exchange. I'm talking about stock right now. Tokyo Stock Exchange, there's the London Stock Exchange, okay? There is Euronext in Amsterdam, there's Hong Kong, there is Hong Kong Stock Exchange, Shanghai in China, Toronto in Canada, Frankfurt in Germany, and Australia Stock Exchange. That's it. Now, what are those things that can be traded in this liquid stock? We've talked about stocks and bonds. Okay, there's something they call ETFs also, which is exchange traded funds. And ETFs, wonderful. Okay, so ETFs is on the exchange. Similar ETFs is made by grouping together similar products. Okay, there is a firm, there is an industry. Okay, Coca-Cola is let me put it like this. Okay, let's look in Nigeria right now. Okay, there is the oil industry. Okay, there is oil industry. Okay, there is there's corn oil. Okay, corn oil, which is managed by owned by Mike Adenuga and Co. Okay, is a firm. Okay, the industry together. Okay, they can pull together and create a product, and they are called. They can make an ETF, exchange traded fund, for that one. Okay, it could be based on the whole exchange. For example, you know, in US you have Standard and Poor. Okay, so you can there's an ETF that is based on Standard and Poor. Okay, which is Standard and Poor is 500 companies. Okay, that means the aggregate of those 500, how they move up and down. Okay, they created a fund based on that, and it's called SPIDER, SPY. Okay, you might see SPY, IWM, QQQ, all those ones. Those ones are exchange traded funds. There are some things they call exchange traded commodities also. Now there's exchange traded notes. Now there's REIT, which is real estate investment trust. Okay, these ones also are traded like exchange traded. And then there are other things, OTCs, which are over-the-counter securities. Okay, over the counter, or every one of them. It's just to make sure that there is something for you to buy and something for you to sell every now and then. Okay, and they make it liquid as much as possible. Now we can classify stocks. Now we are going straight into, we can classify stocks based on the type, whether it is common stock or it's a preferred stock. Preferred stock, okay, that means they are also part of owners of the company, but they don't have voting rights. Common stock or ordinary shares are the ones that have voting rights. But preferred stocks are first of all paid before common stocks are paid. So for example, a preferred stock can be at 6% or 7%. Okay, that means if the company makes say 100 million, 6% of it is taken off, it's paid to those preferred stocks owner. So it's a guarantee. Their own is guaranteed payment. It is what is left that common stock owner can take. Okay, all right. Now it could be company specific also. You can classify a stock based on the company. Okay, it can be, when we talk about company specific, we are talking about there are some stock that are taken to be, they are called blue chip companies. Okay, all right. These ones are matured companies. They are big, they are highly capitalized, mega capitalized. Okay, they are very liquid. Every day, somebody sells their shares. In Nigeria, one of them is every day. If you follow Nigerian Stock Exchange very well, you will discover that every day people sell Zenith, they sell GT, they sell it. I would say Nestle is a blue chip company, but the shares of Nestle is very limited. So it's not every now and then that you easily see, but they are still blue chip companies. Okay. Now there are companies, there are Nigerian breweries, all the oil companies. Okay. 11 P's, okay, no, those ones are already off now. Former Mobile, so they are off the stock exchange right now. So now we can classify them in line with their specific. It can be company specific, so we can say that company is a blue chip company, or the stock of the company is a company belongs to the income stocks group. Okay, these companies, they are called income stock because they pay high dividends. Companies that fall into this group are usually utilities. They are not common in Nigeria. Before we used to have some of them, but now the income stocks are not common in Nigeria. But they're in the New York Stock Exchange. So you are talking about companies that sell electric companies, water companies. Those ones, they make money constantly and they pay high dividends. So when people are getting old, okay, people are preparing for retirement, they have more of income stocks than all other form of stock, because as you grow old, they are not expected to be working. So you need something that will be paying you dividends more and more often and often. Okay. Now there are those companies that are called value stocks. Value stocks are stocks that the price to earning ratio is very low. Okay. That means the price of it, when you compare to what the company earns, okay, whether it is price to earning ratio, okay, low price to earning ratio, low price to earning ratio, or low price to book value ratio, okay, or low price to sales ratio, okay, all right. If he has very low, then that means that company is valued. That means it has a lot of intrinsic values, okay? People are not seeing it right now. So those are value stocks, okay? All right. Now, but usually it is PE ratio that people usually use. So they have value, okay? So that means the company is a little bit undervalued, okay? Okay, that means it can generate more money than the price it is trading right now. That's it. Now, there are some stocks also that they call growth stocks. Those stocks are stocks that have a high PE ratio, price to earning ratio. That means, okay, look at what do I mean by PE ratio, price to earning. Okay, say for example, a company is being sold at the current value of it is 100 naira per share. Okay, and on the last report, okay, annual report, every shares of that company is earning like say 10 naira. Okay, so the price to earning ratio is 100 divided by 10, which is price to earning, which is 10. Okay, now so if there are some companies that they have low, there are some that have high. Companies that fall into growth stocks are companies that they are technology companies most of the time. Okay, for example, look at if you can, anybody can check the PE ratio of Amazon. Okay, the earnings that Amazon is making is small compared to, it's low compared to how much is trading for some. In some cases, you see some, they are 33x, that means 33 times. Okay, some of them, so they are earning low, but the issue is this: people believe that, look, this company is growing. So the money that is making, most of the time, that company is reinvesting it, keeps reinvesting. In Nigeria, at a point, it is all these telecommunication companies. Okay, they are the ones that majorly fall into growth companies. Okay, they don't usually give so much of they don't usually give so much of dividend like now the banks right now. Before, at a point, I would tell you early 1995 to 2005, that decade, okay, banks are always giving high dividends, and banks like First Bank, GT, they are always giving you bonus, 144, 14. That's like it. But now banks are, I think most of them are just paying 15 kobo, 20 kobo now per share. Okay, some of them will pay maybe 2 naira, but something that is selling for you're selling for 33, 35, and you're paying 2 naira. So that means it will take, for me to recoup my money, it will take probably, that's dividend, it will take like 17 years to make that. So most of the time, money is made by capital appreciation, not on dividends. All right. Okay, you can also classify companies based on their size. Look at the mega cap companies like the General Electric, the Microsoft. Okay, on the New York Stock Exchange. Okay, there is New York Stock Exchange. There is always those they call Dow Jones. Okay, Dow Jones. They are the 100 most capitalized companies. Okay, they are like that. So most capitalized companies, you see those ones there. All right. So there's the mega cap, large cap, the mid cap, the small cap, the micros, and the nano cap. There are some their stock are taken to be called. They are called penny stock. Penny stock. Their stock is not even up to $1. Okay, so they are small like that. Okay. When you compare to Amazon that is selling at 1,000, or Berkshire Hathaway, which is Warren Buffett's companies, okay, which is over $1,000 per share, single share, okay. But when you look at those things, you now ask, what is possible for me that I'm a small investor? Then you ask yourself, what is the possibility for? There are opportunities also, like those things that we call fractal shares right now. If you are in Nigeria, I know that young people are taking money out of Nigeria right now to invest in stock of foreign companies right now. It's possible right now. You could buy something that they call CFD, which is contract for difference. It's like a right in some of those companies also. It's CFDs are those things that I will call derivatives also, okay? They are not shares directly, but they are derivatives, okay? So it's a derivative, but allows you to be able to play on the stock exchange. It allows you to be able to invest your money and make money out of it. Remember, I said that derivatives have underlying assets, okay? So CFD is one good example. If you're in Nigeria and you're thinking about how do I do it, how can I do it? Oh, the Nigerian stock exchange is dull and things like that. So yes, okay. If you can open an account and then trade using CFDs, okay. There are other things that they call fractal shares also. Let me just go into that straight away. Now that means you're able to buy fractional shares. Let me just call it fractional shares. Okay. So you are not buying a whole share of, because your money is not enough to buy one. You don't have almost $2,000 to buy. You don't have almost $2,000 to buy one Amazon shares. You don't have almost $200 to buy one Microsoft shares. So you can buy fractions of it. There are platforms right now. There are eToro. Well, don't let me name any. I know that plus 500 and co. Some of them allow you to buy fractional shares. Okay.
Hello, sir.
Based on what you have.
Hello, sir.
Okay.
Yeah, yes, in as much those platforms are genuine and can guarantee them, please let us know them, sir.
It will be as if I am promoting one.
No, you are not promoting.
Plus 500 is one of them.
We are in a session. We are learning.
Yes, the issue is this. There is one of the when you get to, it's said that when you are in Rome, you have to behave like the Romans.
Yes, sir. Yeah, I agree with that.
When you are in Rome, you behave like the Romans.
Yes, sir.
There are some things we will do in Nigeria and we will get away with it.
Okay.
Here, you cannot get away with it. Okay. Now, because I'm on a platform right now, I don't know 1 year, 2 years time, somebody else can see the recordings of this thing. And it will be as if I'm promoting one. And full disclosure, I don't even have any position with Plus. Okay. 500 Plus 500 is a brokerage firm that is I think it's owned by some Israeli. eToro right now I don't have any brokerage account with them, but some of them If there's anybody who wants that, yes, reach out to me. Yeah, probably I can just say, okay, fine. Think about this. Go and research this company. Go and research this brokerage firm. But majority of the brokerage firms are now adopting it right now. You understand?
Okay,
so majority of them are adopting because they see it as an untapped market. Okay, so you see, I was talking about pulling money together. What people do is majorly they pull. What the financial market is doing is pull money together any way that is possible. Okay, there is Robin Hood in America right now. Nobody thought Robin Hood would become what it is today. In like 2 years right now, Robin Hood is a big, in fact, Robin Hood is behind what happened to hedge funds on GameStop issue. Okay, that it took even the Congress in America to say they called MD of Robin Hood for a session. Okay, this is what is happening because everybody knew that it's becoming a fight within the system, and along the line, most of the time, it is end user that will lose. You are not as knowledgeable as the hedge funds. You don't have the resources that the hedge fund has at their beck and call. Okay, they can take a loss today. They will make up that money back tomorrow. Okay, they can take a loss. And those who before you go to an hedge fund, maybe you are putting $10,000 with there are some hedge funds that will not even allow you if you don't have 100,000 to invest with them. You understand what I'm talking about? So those are the things that happen. Okay, those people have enough buffer. Okay, to do that one. But somebody who has just 500 in a savings account and put it there, and then that money burn. Okay, that money got caught up in that misfire. Okay, it's going to affect that person more than the people who are robust and things like that stuff. So as I've said, if you're in Nigeria, you can play on fractional shares. There are some platforms already in Nigeria right now. Okay, there's an issue right now. If you're following the case right now, the Securities and Exchange Commission in Nigeria is trying to say there are all these platforms that are selling foreign shares. Okay, they need to register them. The first thing that majority of us will say is that, oh, this government is bad and things like that. So I beg to disagree. I know some people will not like me for that, but I beg to disagree. You see, that money is from Nigeria. Yes, indeed, I understand with people who are taking the money out because they want to preserve their capital. Okay, they don't want inflation to hit it, to clear it off. Yes, I understand. That's the most important thing. Okay, but there are other things also. When you are dealing with funds like that, okay, when you are playing on the stock exchange, commodity market, and in the financial market, let me just say, you must understand that as you can make money, so likewise you can lose money. Now, if the money is lost in the Nigerian market, the money stays within the Nigerian market. Do you agree with me? But if the money, you have shipped it out of Nigeria and it's lost, okay, the money is lost outside the Nigerian market, okay, meaning that the impact is to be borne by a Nigerian, by the Nigerian market, but okay, but if money is made and is brought back, eventually it favors Nigeria. So you also have to weigh all those things. As I was talking to some of my friends, and I said that when government said that they were banning companies that deal with cryptocurrency exchange in Nigeria, when CBN said that, we thought that they were foolish. But if you have seen what happened in Turkey, you will understand that it was a proactive decision from Nigeria, because Turkey is in a mess right now. Turkey is in a mess. It's in a mess. Okay, the largest exchange, they can't find the person that's eloped. They are looking for him. Some people say that he's in Albania right now. The second or fourth largest, also that one also has collapsed. and a lot of people's pension, a lot of people's money are tied up. Okay?
Okay, sir.
So it's always like that. Just like the problem right now, it's always like that. The issue right now that CBN is trying to handle right now, the MBA Forex, okay, 171 billion. It's in the newspaper. 171 billion naira now.
Yes.
It's become a problem now how to repay that money. Okay? You know that impact on people.
Yes, sir.
You understand what we are talking about?
Yes, sir.
So those are the things. That's why in developed economics right here, it's not that it doesn't happen, but really government try to manage those things quickly in time. So it's a proactive action. It's better that way. Okay. All right. So, and that's the reason why I said that there are some things that is acceptable that can be done. There are a lot of people have done terrible things in Nigeria, terrible things in capital market in Nigeria. Some of them have done, but well, there's nothing we can do about it. Some of them escaped. Some of them, posterity will judge them. But let's put that one aside. So let's continue with what we are saying. So we are talking about now. Let's now go to investing in stock markets. So that now to invest in stock, this is just a cycle that I want us to look. You open an account, okay? You analyze the stock, okay? And then you monitor that stock for some time, okay? Some people don't do this, okay? Right? They just analyze and then they buy straight away, okay? Right. And okay, when you bought, okay, then you decide when you monitor it for a while, you decide when to place your order. This is waiting period. You look at it, okay? But somebody says, why should I wait and things like that. So occasionally, it's better for you to wait and see what things are doing, okay? You decide when to place order because so that you are not, it's not aim, fire, shoot, okay? All right. So you then decide when to place your order, and then you decide which type of order you place, and then you then eventually place that order. That's sequence, okay? It's better that way. It's better that way. It's better. You decide when to place your order, okay? Occasionally we want to say, you are missing good deal, okay? It's better to miss some good deal than to pick up a very bad deal.
Okay.
It's better, okay? Warren Buffett, I'm a student of Warren Buffett, and I will tell you there are two important rules. The first one rule is never lose your capital, okay? Never lose your capital. If you don't lose your capital, one. The second one is if you forget rule one, if you forget, go back to rule one.
One, yes.
Okay, that's it. Go back, not lose, because your capital is your seed. It is your seed. Okay, you have not eaten the seed. Okay,
yes,
okay.
Sir.
There are some people who will eat their own seed, but you have not eaten your seed, but you still lost it. It's bad. Look at the difference between the person who has eaten his seed and the one who has not eaten it but lost it. Okay, if you lose it and you learn from that, it's a different issue. Okay. But if you lose it today, you lose it tomorrow, you lose it, and why don't you eat the thing self? It's better you eat it now. And
so that you will not continue to lose it.
That's it. So it's more like it. Okay. It's you are no better than the person who has eaten his own. Okay. I am of investment culture. I know the number one thing that people should learn is risk management. You can't be overcautious. Okay, it's better for you to be cautious than to be a trigger freak.
Okay.
And you just keep pay. By the time everything will crystallize, you just see that you have burned your account. That's just it. Okay, so it's think about it. If I do this, okay, you must have the hand at the back of your mind. Okay, if this does not go this way, what can I do? That's the beauty of trading derivatives. Okay, all right. If it doesn't go this way, especially options, if you want to trade, it's basic for you to start with stock stock market and stock trading. But when you hop the game, there is better money to be made trading options, because you just use a fraction of what you use in trading stock, in trading your in trading in controlling options. Okay, all right. I can buy an option of $50 on a company that is $400 or $500. It just depends on the timing. But you must also understand that an option is a wasting asset. Okay, all right. It's a wasting asset. When I say it's a wasting asset, it has a time limit. Okay, it's a particular day that option is going to die. Okay, it will become useless, worthless. It can be worthless or can be very can be highly rewarding. There are two actions open to options. Okay, it's either it is very rewarding, okay, or it is worthless. So I think somebody did binary yesterday, options yesterday.
Yes.
Okay,
yes,
all right. That's a I won't do that, but I would rather do a stock option than do a binary option.
Okay.
Binary option, but some people understand it very well and they could predict it a little bit better. But I just a stock option. There are some strategy you can use that even when you are right or you are wrong, you will still make money. That
Okay.
one. So those ones. That one, it's a different ball game. We can't take that in this class. It's not possible. It's something that will take some other things. It takes your understanding and things of that sort. And then there is also a challenge with that, but we're looking to that. All right, so this is the cycle of investing in the stock market. And I want us to look at this, the security order routing, okay, system, which is it's just to tell you that here you can make order from your phone and things of that sort, and then you send it to a brokerage firm, and then the brokerage firm either send it to a market maker or it send it to exchange, okay, or they internalize it in case of where they have such shares with them, okay, and then the order is executed. In this ATS case, it's like you have an ECN account, okay, all right. Okay. So you go straight to the market, okay, from your broker, go straight to the market. You don't pass through market maker, all right. And then when the order is executed, the order is settled. So it's just something easy. I don't want us to go into this. It's trade cycle for it will not be. So in wrapping up, I want to look at this, that investing in stocks. So 6 or 7 steps that we look at it. You need to develop an investment philosophy. Number 1, investment philosophy. Okay, what is my investment philosophy? It's one crucial thing. What a lot of us do is that we skip this number 1. If you don't have an investment philosophy, you will things might not work as you want them to be. It might not work as you want them to be. Okay, I want to invest for 5 years. I want to invest only in growth stock. You understand? It's a growth stock. I want to invest in penny stock. I want to you create an investment philosophy. Okay, you can search this in the internet and see. You make yourself how do I develop an investment philosophy? And if you have one, the moment it helps you, it's a guiding pillar. Okay, guiding pillar upon which, okay, it might not make you because of this. All right, if you follow it fully, okay, you might not make quick money, but you make enduring money. I said something. Why do investment outfits okay, why don't they burn their money, but ordinary retail outfits, ordinary retail traders burn their money? Some people in just one day they will burn it. Okay, It's about investment philosophy. That's what. And then number 2, you choose your stockbroker. Okay, are you going to use a traditional broker? Now, these days, traditional brokers are down and out. No, every one of them is turning online. Okay, nowadays nobody wants to even talk to you personally. So you are either talking to one bot that is you are talking to their chat bot. You are talking to one bot that is called Selena, or the one that is called Augusta, and things of that sort. So you're not talking to human beings directly. Okay, if you are if you want to open an account, press 1. If you want to do this, press 2. That's so as you just have to choose. So it's either you are using a traditional broker or online broker, but regardless of which one you are doing, okay, you need to compare 2 or 3 brokers together and see, okay. And the basis of comparison are things like research resources that is available to you if you join them, okay. Their customer support, the educational resources. You cannot make it in this market with your own knowledge, okay. All right. There is a theory called market efficiency theory, okay. Before you know what you think you know, the market has already known. Though occasionally there are imperfections, occasional imperfections, but before you know it, it's already in the market. It's already factored into the cost, especially if you are trying to trade in on the global stocks, okay, international markets. You must understand that. So you need to keep educating yourself, re-educating yourself. I can tell you, I can't remember how many books I bought on stock trading, or the ones I bought on stocks, the biography of people, Peter Lynch, people who made it in stock trading, okay, who made it in money market and things like that. So I can't remember. I can't just say. Okay. Till today, when I just see some people, I'll read their own article. Well, when I saw Robuni is an economist, I'll read anything it talks about, because some of them have George Soros, I'll read, and things like that. So those people, they made so much. Warren Buffett have like that. So several people like that. The best of them is Warren Buffett, Warren Buffett is one person that, and I really, really like him. And then the basic thing is also that you must learn also about personal finance. Number one thing you need to learn also in educating yourself is about personal finance. It's personal finance that will help one do well eventually. Personal finance is good because it helps your investment philosophy. It helps you about to know, okay, the necessary things you need to do, okay? And then you need to also compare their trading platforms, okay? How is this person's trading platform different from that one? Which one do I find suitable, okay? It could be as well as, okay, graphic user interface of it. Is it appealing to my eyes? Those are little things that affect us, okay? Can I see their lettering well, so that, okay, I don't make mistakes when I'm booking any transaction I've made, okay, and I feel that I've made money when I've not, okay? So those are things. All right. Okay. Now, when you have made your choice, you select one, you activate and you fund that account, okay? And then you select prospective stock, okay? You can have, like, I would really, really advise that most of the time, apart from 10%, most of the time, you don't have more than 6 to 10 companies, okay? 10, okay? 6 to 10 companies, okay? that you are watching 6 to 10, okay? Just watch them, okay? And you buy today, okay? You buy, just make sure that every trade is not more than 5%, okay? It's not more than 5%, so that even if it goes wrong, it does not affect you that much, okay? All right. So, and then you now develop a selection criteria. For me, I have some selection criteria. There is the fundamental part of it, and there is the technical part of it. The fundamental part of it talks about the management of that company, the future of that company, okay? There are some companies that look, right, whether you like it or not, those companies, all right, the market is, their future is with them at that particular moment, okay? All right. And it's always with them. All right. For me, I want to buy any company on global market. I'll talk about AMD. I'll talk about Microsoft. I'll talk about maybe Apple. Apple. If I decide to, or something like you can focus on. It can be a sector. Okay, you just select a particular criteria. Okay, and you look at it. Who is managing this company? It's important. The people managing a company are important. It's very, very important. And I think that's the biggest challenge we have with some of our companies in Nigeria right now. It's the biggest challenge. Okay. Before, we have some notable people managing some of those companies. Okay. They are, when you hear their name, you just go to sleep. I remember when I was still buying Nigerian breweries, Felix Ohiwere was there. They kept on paying good dividends. They were doing bonus shares. After the old man left, the one who was there, yes, he managed the place for another time, but I don't even know what the companies look like right now because I'm out of it for a very long time. Okay, so that's it. So you develop a selection criteria, something that you use in selecting what works. Okay, this might take a time. Okay, it does not mean, okay, but at the same time, you can, and this one you will tweak that number 5, you tweak it over time. Look at it, okay, you discover that, oh, this was wrong. Okay, all right. So you keep adapting it until you get something that you keep using every now and then. Okay, all right. You use it, you see that it does not, this company does not follow this rule. Okay, so you think about it. How do I change it? Okay, how do I acquire? Okay, and then you analyze these prospective stocks, and you using fundamentals and technical analysis. Okay, and you, as I said, you allocate funds to it. Don't make sure it's not more than 5%. Okay, and then you eventually buy the stock using your brokerage account. And after you have bought it, another thing that I didn't put here is that you need to monitor that account, each one. Okay, there are different ways that if you think that a company is good, is still very, very meeting your, and you still want to keep on taking your position in that company, you can use something they call dollar averaging. Dollar averaging. So you are buying a particular amount. You keep, for example, you buy 10,000 naira worth of shares of a company today. All right. Next month you buy another 10,000. So dollar cost averaging. Okay, you keep doing that over. You understand? You keep marching up over like that. It's not like that. It evens out a lot of things, whether you like it or not. Okay, stock investing, equity trading is an edge against inflation, a very good edge against inflation. So when you're talking about inflation in Nigeria right now, you want to hedge it, yes. Equity trading is one way of it. Why do I say so? Because whatsoever it is, it will affect the company. Company eventually pass the cost to, hello? I'm already, this is the last part I am here. So I'm rounding up right now. So so it's I'm just showing my farewell. So it's when you are looking at it, what happens most of the time is that the company will be able to pass the cost to end user, and so you have edged your own. So that means company will make more money, okay, and increase the value of your stock. That's just more like it. And whether you like it or not, every person needs to. If you are trading, you must always have cash in your trading account. You must always have cash. Don't be fully invested. Okay, it's one of those problems that people have with us. All right. Okay. At this point, I think I'll just round up. I'll just say that is my own. So if there's any question or anybody wants to ask anything, I'm open to a question.
Thank you so much, sir. Thank you for the session. So powerful and insightful, and we are very, very grateful, sir. Let me quickly ask my own question, sir. That
Okay.
when we are analyzing a stock, what are
Yeah.
the factors that we should consider when we are analyzing any stock?
When you are analyzing a stock, it's there are two or three. You classify them into two or three things. Number one is I will look at my analysis will be based on it's a fundamental analysis or a technical analysis. All right. My fundamental analysis, I will look at what is the future of that company. Who are the people running it? Okay. Is the market share increasing or decreasing? Okay. Those are the things that you can get to know. Okay. Who is it? Who are the management? Okay. Have you been hearing something bad news about them? Those are first thing you begin to look. And then the technical analysis, you look at it, how much from technical, even part of it could be fundamental, okay? All right. At what rate is it growing its market? Okay. All right. What was the revenue over the last 5 years? All right. Revenue over some of those things are available. Just get the annual report. Okay. What progression? What's the progression of their revenue? What's the progression of their cost? What's the progression of their profitability? So you just look at it. Okay, those are things, and then you look at it. You go further in what is the 52-week high price? Okay, so that's where you begin to look at where do I come in. Okay, am I close to the is the current price close to the 52-week high, or is it close to 52-week low? Okay, all right. The quarterly results that the last quarterly result that they made, what does it look like? All those things you can now see them online. You might not see them in a particular place. You can see them in their investor forum, okay, of that color, because they will provide that for you in their published account. Okay, you can see some of those things. But when you are talking about their 52-week high and low, you can always get that one from the brokers and things of that sort. You can always check that one. Okay, so that's that. Okay, any other question?
Yeah, we have questions, sir. And how can we reform African or Nigeria stock exchange in a time like this, sir? Because I know you are an expert.
How can we
reform or balance our stock exchange, which is Nigeria and Africa at large? I know you are an expert.
Well, I think Nigeria is the second largest. Okay, Johannesburg is the largest, and then Nigeria, and then Kenya, I think Egypt also, Cairo also. Whether you like it or not, let's tell ourselves to. There are a lot of things that has happened, okay, and people are beginning to turn things. They are trying to deepen the market, okay, give the market a greater depth, okay. We might not have arrived at a position that we could liken to the likes of the New York Stock Exchange or the London Stock Exchange or things of that sort. Okay, but one way or the other, they are making it better and better and better. The only one of the challenges that I see, okay, that it's available right now. One the opportunities that you will see probably is this. For a person like me who has been there are periods I was talking about. There are periods when you buy today now, they won't even allot shares to you until 2 weeks or 3 weeks time. Okay, you say ask a broker. But today, if they buy today, they must tell me straight away today that they bought my money that I gave them, they've used it to buy this. Okay, so that means they will pass that debit into my account straight away. Okay, and so I expect them to put that into my, I expect to see that in my, so it might not be the most fantastic thing, but okay, we are in the process of getting to something that probably you'll be able to trade like the data you get from Nigerian Stock Exchange right now. It's end of the day data. You don't get real life data, and if you're going to get real life data, seriously, you will pay through your nose. You will pay through your nose. It's corporate bodies that can do that. So, but I know as they begin to see that money is moving out of Nigeria, okay, they will also be forced to do things that will open up the market the more. That's what I feel.
Okay, sir. Thank you so much, sir. Because we have just about less than 15 minutes to go to start the second
I understand
section.
that.
Yeah. So we are going to wrap it off here right now. If you have any question, you can follow Mr. Akintayo Olutade on social media. If you have any personal question or you want to get in contact, or sir, if they want to contact you, how would they be able to contact you, sir?
Let them contact me through you.
Through me. Okay. So if you want to contact him, reach out to me, then I will link two of you together. Thank you so much for the impactful section that you have led us so much.
Thank you, Maiwa. Thank you very much.
We don't take this for granted, sir. Thank you for your time, for everything that you have done here tonight. And say
thank you,
big thank you. And on this side, we are going to end the section. But before I'm going to close right now, I want to talk about our store. Okay, I have a book written early in March, and the book is focused on how to make passive income online. And I would like you to get the book. The book is over there on our web store. Just go to theincomestreams.com/shop. You'll be able to get the access to the book. And also, we have some podcasts available for you that is going to help your business and your brand too. So go and listen to them. And at the same time, we are, I'm into publishing and printing. I have a printing and publishing stores that I run online too. So you can also visit us for your printing and publishing need. And on this note, I would like to end this session here so that we connect with our next speaker. Thank you, everyone. Thank you, Mr. Olutade, for joining us. And we are rounding up this section right now. Everyone, thank you, and I will see you very soon. Bye for now.